Hey everybody, it's me, the Einstein of Wall Street, from the balcony here at the New York Stock Exchange. It is a beautiful, gloomy day here in New York City. Spectacular, we're waiting for the sun. I'm still in July. It is friggin' May now. It's May, right? I'm here with my man, Dan Ives. This is Einstein and Ives for Trade Like Einstein, for Money News Network. We are going to break out a new YouTube sensation here. We are basically, this is called The Big Breakdown, right? Isn't that what we're calling ourselves?
I love it.
Einstein and Ives, The Big Breakdown. That's what we're talking about. We're also here with my best friends from Norway, who I've known forever. They're spectacular. And my new friends, the #1 Forex champion of the world, Gianluigi, check that shit out, and Stefano. So we got a lot of stuff going on, and my man Matteo Mantilla, the best
That was great
videographer.
pronunciation.
Hey,
Congrats.
forget it.
Awesome.
Right, I'm not Einstein for nothing. I know I look like Einstein, I'm not that friggin' smart. Anyway, there is so much going on here that we want to break down, right? The market, we know we talked about the first quarter, best quarter since 2019. We talked about April being this just problematic month overall with the economic data coming out and the whole thing with interest rates, and then the Fed talking out of both sides of their mouths, and how did the market react? And literally, it was a healthy pullback. We actually pulled back 10% off the high of the first quarter, and that's good. That's healthy. It happened for a real reason, and when stuff happens for a reason that makes sense to us all, that's a good thing. We came into May, there's all this sell in May and go away, that's not obviously happening, but there's so much going on still with interest rates. The whole story, look, we came in last week, and I don't know, we didn't get to meet last week, but we came in last week and we had the missing component to the economic story that the Fed was not dealing with was the labor market. We were looking for 240,000 new non-payroll jobs coming in. We had 177,000. Then we had unemployment rate of 3.8, bumping up to 3.9. This was an example of where bad news became good news. Bad is good because the Fed was at a point where they were literally considering raising interest rates because we got a little bit ahead of ourselves on our skis, right? And they didn't know really what to do because the economic data that was coming in, CPI, PPI, DUI, DWI, whatever you want to talk about, it was not working. And so they were considering raising it. It turns out that that component of the labor market that came in on Friday being bad news, that was worse than our expectation, made it so that the Fed had a little bit of powder that they could say, you know what, maybe I have an excuse now to raise interest rates maybe once this year, right? Cut them, raise them, what are we doing?
Well, it cuts because
We're cutting, excuse me. We've been raising, we're cutting. I got confused, it's so crazy. So we're going to start cutting them. They had these promises of cutting. They cut it down from 7 to 3 to 2 to 1, maybe a raise. Now we're gonna maybe get one cut. We're gonna ask Dan. Dan Ives, master investor, master analyst, the #1 in the world in the tech sector, who I respect, and is the #1. We're here with Einstein and Ives, kicking butt, taking names. Let's break it down with Dan. Tell me, what's going on?
The missing piece for the Fed was the data points. And when you got that soft unemployment number,
right,
and the soft labor, the missing piece was then PPI and CPI. Okay. So when you combine it now, the Fed is starting to get the bullets. They're getting the data that I believe a cut now comes sooner than even the street expected, even if you go back 2-3 months ago.
Right.
So when you combine that with a strong earnings season,
okay,
and the AI spending that we're seeing from Google, developer conference this week,
right,
obviously you have OpenAI, we're now having almost a perfect storm. I'll call it a Goldilocks scenario for the bulls.
More than a perfect storm.
And that's why coming here in New York Stock Exchange, I passed by a few caves up in the woods. I saw a bunch of bears going into those hibernation mode, because I think right now those bears, they go deep into hibernation mode. And the bulls are really going to rule this market for the coming months.
So look, everybody started to get this sense when April came along that that bear was getting poked, that guy was sitting in that cave, right, sitting there eating his nuts and hanging out with the raccoons and whatnot. But we felt that maybe that people were not. Look, the market, the media loves to be catastrophist. Mm-hmm. We've had an absolutely amazing couple of years here. Then we had a great first quarter. We have 1 month where we suddenly pulled back 10%, and suddenly it's like the end of the world.
And it started with that Fed meet. It really started with the Powell press conference,
right,
where he took any sort of hike. That
Remember
was always
we talked about.
We
that.
talked
Go
about
back
that.
to that.
So
go to the videotape on that.
Yeah,
one.
from 2 weeks ago.
Yeah.
Took that hike off the table.
Right.
And then it was data dependent.
Correct.
After that, what do you get? soft employment number.
Right.
You get an unemployment number that ticks up, and then
Right.
PPI and CPI this week. Now you're seeing PPI and CPI roll off. Plus, when you look at gasoline prices, those have come down significantly from April to May. So you're now starting to almost see a downhill sort of.
So we had come down from 8%, and I love your scenario, I use it every day about the diet. We came from
35 pounds you lose, the last 5 pounds
are really difficult. So we were at 8% and change. We got down to 3. They were hoping for 2.9. We never got there. Then we started to bip up, and now you're actually saying to me that the economic data coming out with the soft labor numbers are giving us that we're not actually dipping. You're saying with oil prices that we're actually starting to descend again.
You'll see June and July CPI and PPI continue to go down.
So today's number, PPI came out this morning.
So PPI was
right in line, 3.4.
and it was cooler. Doves were flying over New York Stock
Right.
Exchange, cooler than expected.
Okay.
Now I believe you're going to start to see. You're going to see June, July. I think summer months. You'll see that PPI and CPI continue to come down. Now that gives the Fed, gives Powell those data points that ultimately a cut. You go back 2 months ago.
Right.
They're like
There were no cuts on the table at all.
Now you could be looking at a cut by September.
Okay.
And I think
25, maybe not more than
25
one.
bips, but you could see 50 bips of cuts
By
for
the
the rest
end of
by,
the
by
year.
the end of the year.
Okay.
You're starting to price that in. You combine that, you triangulate that
Right.
with a strong earnings season.
Okay.
And then it goes back to that Starbucks earnings that we talked about.
Right.
Where even the loyalist consumers are like, no mas, we're not paying for it.
Okay.
So it shows we've hit a point now where these companies can continue to pass it to the consumer.
Okay.
That's what you need to see. And then the AI revolution, look at the spend. Google, Amazon, Microsoft, the godfather of AI, Jensen,
Right, he's
NVIDIA.
on, right.
They'll report next week with all the market watching. We expect just robust numbers.
Okay.
You combine that all. Right now, I think it's the bulls that are drinking mimosa, the bears.
So you can see it. A couple of bulls sitting around there with a nice Coca Loco, having a couple of cocktails. And the bears are back in the woods.
The bears are going through their spreadsheets, can't figure it out, and then they're going into hibernation mode.
I love that. It's amazing. So look, put down the catastrophist. Listen to Dan, because Dan tends to always be the cup half full guy, not the cup half empty guy. And at the end of the day, if you look at historic markets, over time markets do nothing but go up. We've seen that for 100+ years. Every sell-off that we've seen, whether it's a sell-off, a crash, a crisis, a catastrophe, and I don't use the word lightly, right? We've only had a few of those, have been better buying opportunities and selling opportunities all along. And everybody, look, we do have a new amazing infusion of retail investors in this market, and that's exciting. And we're going to talk about that. We're going to talk about Roaring Kitty rearing its head, walking around the bull, walking around the bear, and coming out of the kitty palace there. But at the end of the day, from long-term investing perspective, you're looking at the long game here. And the long game, as far as Dan is concerned, is a bullish one.
You have a fourth industrial revolution that's playing out.
Listen to those words. The fourth industrial revolution.
And me and you've talked about it a lot. It's a 1995 moment,
Okay.
not a 1999 moment. So
Explain
this
to me. What is that? Explain to us.
Star of the internet, 1995.
Right.
Market
The build of the bubble.
Build of the bubble. The difference is that I don't view that there's a bubble pop like we saw in 99, 2000. Covering tech stocks back then to compare it to here.
Right.
The fundamental stories, the use cases, it's happening.
Okay.
This is not pie in the sky.
Right.
Enterprise. Look at
So
Google's.
the reality back then was really just a far off dream. There was nothing they could bite their hands into. You're saying that right now there's real spending going on. The AI story is real. It is a revolution, and we're in the middle of it.
We're in the middle.
We're going to be hanging out with robots, flying independent helicopters on our way to work within a few years.
We're in the middle of a revolution that's playing out. Now look, political, presidential election,
Right.
U.S.-China cold tech war, the tariffs this week, geopolitical. I'm not saying that it's going to be just smoothing up and to the right.
Correct, right.
But you can't deny the spending and the CapEx that we're seeing for tech.
Right.
That's a tidal wave of spend.
Right.
And that's now the second, third, fourth derivative that we're seeing play out across tech.
Okay. So billions of dollars are being spent, trillions of dollars are being spent. You've seen it hands-on with your own eyes, okay?
I mean, in San Fran last week, for the whole week, I could tell you the amount of spending that's happening on software, chips, cybersecurity, and cloud.
Right.
It's robust. And unless you have a telescope in a planetarium, it's hard to find this recession.
Gotcha. And you know what? And I love that. Look, for the last 2 years, they've been talking the recession, depression, all this gloom and doom. And I said, it's not happening. I said, you need to reevaluate the relevance of the terminology that people are using. This is a post-COVID world. This is a completely different world we're talking about. AI is something new. It is a new revelation and a revolution. I sound like, what's his name from the Hamilton. You know, I went to high school with Alexander Hamilton. You know that, right?
I did know that.
Yeah, okay. Revolution, revelation. Boom. Anyway, so let's stay on a positive tack. Let's pivot for a second. So something else. So it is May. We're in the first week. The market seems pretty robust once again. We came out of that darkness pretty quick.
Yep.
Earnings have been super solid. And then out of nowhere, okay, suddenly Roaring Kitty. Right? Everyone knows Roaring Kitty. Roaring Kitty was the guy from not the Wall Street Bets guy, because I was on a Twitter space last night with Jamie Rogozinski, who is the original Wall Street Bets, who's what a mensch, what a mentor for me, an amazing guy, a friggin' genius. But we had the GameStop phenomenon, okay, that came out of the 2020 mode, where Roaring Kitty came along. They started that attack, whatever it was a disruptive landscape that happened on GameStop, and out of business bankrupt company, going from out of business bankruptcy to $2 to $20 to $483. It started a meme phenomenon that really changed the whole landscape of this industry. Yep. It felt like we were being under attack. We had a lot of people from Citadel and Melvin Capital and all that going on. That's another story I'd love to talk to you about. But for 3 years, the kitty has been quiet. Yep. There's been no chatter around the meme stocks. That was a place where, and I spoke about it on the space last night, that everybody seems to think that everybody made millions of dollars and then they went back into their caves. It's not true. I analyze this forensically on a day-to-day basis. 9 out of 10 people lost money in a GameStop trade from 2 to 483 and back to 3. In AMC, in Rivian, in BlackBerry. Those names, you don't think that those posts on Instagram of people with stacks of $10,000 bills on back of their Bugattis were reality. That was all made up, copy and paste BS.
Those are rented Bugattis.
Yeah, exactly. I'll rent. We should do that. Rent a Bugatti. This guy's got a Lamborghini. Hey, John Luigi's got a Lamborghini. You'll lend it to us? Okay, we're going to Dubai together.
And he actually looked like, if you said to me, like he could pull off the Lamborghini.
Yeah, he can.
But you're more of a Bugatti guy.
I'll go with the Bugatti guy. You know what? As a kid, I always wanted a Rolls Royce, but I'll go with the Bugatti. So let's see what happens. Out of nowhere, after 3 years of silence, Roaring Kitty posts this weird, innocuous, cryptic a tweet that was him, a cartoon of him or somebody sitting in a chair. It didn't say anything. It didn't imply anything. And suddenly, out of nowhere, GameStop went on fire, and it went from 20 to 80 and right back down now to 40 or 50. It started this spiral of it. People were sitting around looking to buy anything they could get their hands on because there was this feeding frenzy for no reason. No reality was based in. What do you think about this? What do you think his motivation is? What do you think about how this affects the integrity of the market? What the heck do you think about the Roaring Kitty?
I actually think, so this is not a 2021 deja vu. In other words, I view, obviously, GameStop, Roaring Kitty,
the meme phenomenon.
You're going to have a few names which obviously play into it. But I do think the market now is more efficient with some of these meme stocks as it plays out. I don't view that this is going to be something that spreads.
It's ongoing. You don't think it'll spread.
So, and I think that's a good thing, because right now, the last thing, we talk about all the data points the Fed's getting to cut. To see a meme phenomenon again, that would be a bad thing overall if it's spread for the market.
Correct.
Because that goes for Powell and the Fed. Okay, how could we be cutting in that type of environment?
Right.
So I do think that even though it's data point driven, I don't view this as a 2021 deja vu. I view it as a little spike, And you're going to have some of that sort of risk-on sentiment.
Right.
But I don't view anything more than that.
So, but who are the players involved? First of all, I'm not clear that this guy's account wasn't hacked, that somebody just decided to start messing with the market again. I think I have no problem with disruption. I love the fact that there are 40 million new retail traders trading into the market. I don't like the fact that people get this delusionary concept that this is a get-rich-quick scheme. Go ahead, tell me what you want to say.
No, but that's why you have to focus on all the themes we talk about,
right.
The long-term themes,
right.
Ways to play it.
Right.
When you play some of these, and I think it's always the black or red at the roulette table.
Yeah, exactly.
At 2 a.m. in Vegas.
Right. Yeah, I like that analogy. It's at the end. You don't want to be that person who got to Vegas with $1,000, right? Made $1,000. Decided they had golden hands. They were all in, and by 4 a.m. they were sitting out on the thing. They'd been to the ATM 5 times. They calling their spouse and saying, "I can't afford the rent next month." Sitting there drinking, smoking Lucky Strikes, drinking Hennessy. That's not who you want to be in the investment world.
Usually at 3 a.m. when you stop by the roulette table on the way to your room, it doesn't end well.
It doesn't end well.
But
it's called revenge trading.
But again, that's why I think in this market, it's navigating the trends, and it's sticking to the sort of long-term focus and ways to play it, because it is complex, right? It's almost like a puzzle.
It is a puzzle
that you're trying to put together. Just like we said, bad news is good news, good news is bad. So it's trying to, and that's why we do this, to sort of navigate what sometimes is very intimidating from the outside, to really break down what's happened in the market.
So we've been talking for the last couple of weeks that we want to break this down to make it appealing to everyone, to take down the barriers to entry, to make it accessible and understandable. And when something like this happens, it disengages the integrity of what Dan and I are trying to talk about. And look, it's a fun thing. I kind of think it died really quickly. I don't see a lot of longevity in it. We really want people to start benefiting from what we're talking about. Right? Get down to the real facts about long-term investing, responsible investing. This man is the guy who knows more than anything about tech. Tech is the revolution right now, and I think people need to understand that. And we talked about it the other day, that we came into April, and everyone was saying Nvidia is so frothy, it's so expensive. I'm not going to pay. The stock a year ago was 108. It was trading 3 weeks ago at 940. Everyone was complaining they missed that boat, and then suddenly it goes on sale in April, and everyone's running. As you said, they're running, for the hills, screaming fire in an empty.
Look, I was on a plane a week ago. I had probably an 85, 90-year-old woman stop me and be like, "Would you buy Nvidia?" So the point is
the guy who sells hot dogs on the street is asking me financial advice. I know there's a problem going on.
So that's why we're just going through. It's a period of price discovery.
Right.
I just go back to what Jensen and Nvidia are doing. It's the star of the internet. In other words, this is a new revolution. This is not a fad, a hype that we're going to look back on and be like, it's real, it's the use case. And that's why next month when Apple talks about their AI strategy with OpenAI, that's going to really be bringing AI to the consumer, just like Google is going to be bringing it to search.
You know what? I really appreciate your down-to-earth approach. I really appreciate the fact that when you say something, there's a lot of work and research that goes on behind it, and that's at the end of the day what we really want to pass on.
I think
that's
you have to do is look, 3 million miles traveled. That's how air miles. That's how we've been able to discover the trends. You don't discover the trends in the 10th floor of your New York City office building in the spreadsheet in DCF.
This gentleman travels the world trying to get you the facts about the story that's going on in the nooks and crannies of these companies that he's actually able to recommend, which I can't do. So I just love this. This is so much fun. We are going to start doing some great stuff in Italy. We're going to completely blow up the whole YouTube thing. At the end of the day, trade like Einstein. Einstein and Ives, our new Italian brothers over here, my friends from Norway. We've broken this down in the best way. We're giving it to you on the DL, and that's all I got to say about that. Boom! Einstein and Ives to the moon. Forget about AMC and that other stuff. Thanks, buddy.
Awesome.